Let's also get in Sandeep Tandon, the founder and CIO of Quant Capital. So, sir, firstly to start off with, what is your first analysis of the budget? Are you seeing this as a clear positive coming in from the government side, fact that they are giving more boost to consumption rather than capex?
Frankly, it is on a quite expected line that was need of the hour. Okay, so it is quite growth centric budget, and we were looking for to increase the consumption even marginal at the cost of marginal capex. Okay, in fact, the capex is also not gone down. If you look at the capex related to the grant, if you add, which is like 3 lakh has become 4.3 lakhs crore. So effectively means the overall capex, which was like 4.1% GDP, has now become 4.3% of GDP. Okay, so I think it is that side. I'll say a lot of people have ignored it. That is also quite constructive. And given the consumption which was struggling and overall Indian economy is struggling, I think it is a step in right direction. And we think it's a great budget given the background which was required.
Right, sir. But, sir, in this budget, we have not seen any major fillip or major push towards manufacturing. Do you see that as a disappointment?
See, sometimes you have to look at that last many years, the flip was always focus was there on the manufacturing through PLI scheme or various incentive which was given. Right now, what was, if you look at last 6 months, particularly from July 2024, Indian economy was struggling. Okay, consumption was declining. So I think that was a need of the hour. You have to boost the consumption thing. And I think they have done on by tweaking a small bits on the taxation side. I think it's a good incentive. And ultimately, if the consumption moves up, it will get compensated up to a certain extent through GST route, and indirectly you are saying manufacturing activity should only increase because consumption should rise. So that was the key thing which was missing. So anyway, indirectly manufacturing will be beneficiary of that.
Okay, Gautam Shah, let me come to you. What's your first take on the budget? Let's start with that.
Well, I totally concur with what Sandeep ji said. I think it's a step in the right direction. There was a bit of a consumption deficit and a confidence deficit from a market's perspective, and I think the government has done a phenomenal job to address the same in these last few hours. I think the fact that the markets are in the green and the fact that we've recovered about 700 points from the recent low, I think just tells you that the market is a lot more confident now. And remember, India went a little off track in the last 4 months because of our own problems. So the government and the RBI governor had a task at play. The government's job has been done pretty much to a larger extent today. And next week, if the RBI policy is also a little more economy and market friendly, I'm pretty sure both the job will be done, and that will help gain a lot more confidence for the stock markets. So I just feel that this was the need of the hour, and the government has really hit the nail on the head, and hopefully the markets will realize that, and we will be back in action aligned with the rest of the world.
Some key levels to watch out for this week. We've of course done a deep dive with regard to how in each of the last 4 to 5 years and budgets, how markets have reacted. What's your sense for the week, for the coming week?
You know, just a few days back, the environment was so pessimistic and there was just no room for hope. We were at 22,800. We saw pretty much a bear market in the broader markets. You know, the average decline in the NSE was about 28%. And now with the budget developments and with the way markets have come back and the fact that we are sustaining above 23,500, I would really read it positively. And if we can sustain above this number of 23,500 for a day more, maybe on a Monday when FIs are going to be back in full action, I think there is a room for 4-5% upside for the indices easily. But the bigger theme here is not to play short term, play the India story from a longer term perspective. I think from a 12 to 18 month perspective, current levels offer great value, great margin of safety, and great confidence for Indian investors.
Right. Sandeep sir, coming back to you, some positive statements that we have seen when it comes to tourism and the nuclear sector. Are you excited to buy these themes now?
See, we are quite overweight in this space. You know, if you look at our portfolio, we could be one of the mutual funds with a very large holding in hotel stocks. Okay, at least 4 stocks we own close to 4 to 5% of the company. So that's a clear indication we like this space, both hotel and hospital. And the hospital as a space, hospital has already been recognized. I think hotel is picking up. I always describe how the real estate sector got built in last many years. Something similar is happening in the hotel space with ITC also now getting listed. The basket is pretty meaningful. So anyway, we are very constructive and government has given the desired push So we remain equally bullish about this space from a medium to long-term perspective.
Uh, you know, plenty of ways of playing various themes, Sandeep. I want to try and first off understand FMCG is the one big push that this budget has got. How would you like to play this theme? Where will incomes flow first?
Be very candid, we are quite bullish on this space. We have more than 15 to 18% all exposure in this space already. And this is one sector I generally give example. Okay, this was like erstwhile admired category stocks of FMCG. And in last few months, they have they have reached the neglected space, or some of the stock have reached even the most hated zone also. So it's a classic inflection points what we try to identify when you look for a buying opportunity. I think the entire sector is really fit the whatever needs point of view, and obviously budget has given the desired fillip. So I think it's the sector which is not cheap in any manner. It has been always expensive space, but it will remain expensive given the growth rate which we are expecting from longer term perspective, irrespective of the challenges which we have seen in last few months or maybe few quarters. I think that is settling down. So this is a one area, because a lot of under ownership still exists in this space. And if you really ask me, people actually hate this space, you know. And so I think I am looking for all neglected and beaten down names or erstwhile admired category stock, which now in the neglected zone should be a buying opportunity. And FMCG fit the bill perfectly.
Right. And Gautam, any other theme except consumption that stood out for you, or is looking good on the charts?
Well, I think do not forget that the FMCG index lost about 22% in a matter of a few months. It's never had happened in its history of the last 15 years. And I think FMCG is a mirror of the economy. Maybe there was a problem, the markets realized it, and that's probably the reason FMCG stocks came off quite a bit. Now we've seen lovely basing, and I think that turnaround looks for real, and clearly there is a lot of value and margin of safety in the entire basket. Yes, they are expensive, they will be expensive, but I think they've come to a point where the risk reward is in your favor. Another basket that we like, and we've been talking about it all along, is financial services. I think with banks, NBFCs and insurance companies, you just can't go wrong. I think in terms of valuations, in terms of charts, and if the bank nifty were to cross the level of 50,000, which is an important barrier and hurdle, I think we could see a largish 10 to 15% move on that index. So financial services, auto, FMCG would be my top three picks at this point of time.
Okay, Sandeep, going to come back to you very quickly. While I appreciate the need for prudence and also compliment the Finance Ministry for sticking to that, but the one key problem has been that CAPEX has not come in a big fashion in this budget. Of course, compared to 5 years ago, CAPEX, the bases are completely different, but the growth has tapered sharply. FY25, we're going to see degrowth. FY26, we're just going to revert back. Is that a disappointment for you, or do you view this differently, given that consumption was the focus in this budget?
I think, as I described in the beginning itself, it is not fair to say that CAPEX has not grown, because if you look at the grant aspect also, which you cannot ignore, because we look at the total aspect and which has actually increased only. I said it is the CAPEX, which was 4.1%, now become 4.3%. So that's the first point. Second important, what you have to look at, if the government is very keen to maintain the physical discipline, okay, obviously then rooms are, space is very limited. You can't do both the things that you give, boost the consumption also by compromising on the tax aspect, and then simultaneously you continue with the massive capex. So I think some sort of popular step definitely is there's a populist budget in that sense, keeping in mind some of the elections also. But I think it is very important what was the need. I think it required, I've said in one of the channel in the morning, at the cost of fiscal deficit also, if our government has to boost the consumption, they should do it. Because a larger interest, that's the way we should play this game. I think it's something has happened in COVID time also. The fiscal deficit went to 9% and then 6.5%, and now we are back to 4.5 or 4.48. So I think it is the one has to adapt the environment, what is prevailing right now in the global market and Indian macro particularly, which has been deteriorated. I think it's a step in right direction. Even let's say it comes at the cost of marginal capex, I think is good.
Okay, last question from my side, Sandeep. Firstly to you, how would you rate this budget out of 5?
I think 4.5.
And Gautam, how would you rate it?
I would definitely give it a 4 out of 5.
Cool, thank you.